Hello, everyone. Good afternoon. Happy Friday. How are we doing today? If I could get a quick mic check and let me know that you guys can see the E-mini S&P daily chart. All good? Okay. Thank you, Denisha. Thank you, Richard. Kieran, thank you. All right. Hello, Anita. Thanks for joining us. Lucas, hello. Matthew, what's going on, brother? Christian, good to have you guys. Ahmed, hey, Dylan, how's your week? Great week. Relaxing. Not on the charts real heavy. Focused on other things outside of trading, business, studying, working. So great week overall. Smart FX tips. Hi there. All looking good. Awesome. Thank you. Matthew, were you surprised this week? Absolutely not. No, nothing in this current climate surprises me. With everything that's going on, all the manipulation, everything around the world, this type of delivery is to be expected. So we'll get into some of those details today, touch on what we saw this week and why I was not a part of it and why I was not interested in trading it. Donaldo, thank you. All right, everything's good. Awesome. Abraham, if we can make sure to get that link on Twitter too, that'd be awesome. Let everyone know that we're live. All right, Brian, everything's good. Donaldo, thank you. All right, so let's go ahead and sort out some price action, see what we saw this week. I'm going to cover a few things, but we are going to start from dollar. We'll take it down through the typical analysis, tell you guys what I had going through my mind and what we saw this week. I mean, this was a really strong rally this week. So we repriced the levels we're looking for, and then, man, market makers are raking short holders across the coals. So again, very manipulated environment, everything that's going on around the world, and we'll touch on that as we get into different assets and all the uncertainty that we have going on right now. That makes it such a difficult climate, and we'll get into those details here. So let me go ahead and share the dollar. So let me get out of the trading layout. Let's go all the way up to a monthly chart. Eduardo, hello. Happy Friday, Denisha. All right, so let's go up to the monthly chart. Let me go and take this level off. So we're going to do macro analysis. I'll share with you guys what I was looking at, what I was weighing out this week. So my interest was very limited in trading this week. And then obviously you guys can see that the delivery was not clean. Yes, markets are moving all around. They're gyrating up and down all day. But is it low risk, high probability? That's something you constantly have to ask yourself when you're looking to take on risk in these markets. Remember, it's not Chuck E. Cheese. It's not casino time. This is real money. And you do have to be mindful of what it is that you're doing and when you're incurring risk. So again, with all that, that's why the way I speak to you guys on Sunday, it's with a lot of caution, especially with the current events right now, where things are just waiting to pop off. And those black swan events will have reverberations throughout the marketplace. So looking at the monthly chart here for dollar, I would have liked to have seen us stab into this inefficiency a bit further. But what I was monitoring on the monthly chart was how we trade in this inefficiency. So because we displaced higher, we shifted market structure, and now we're trading in this fair value gap. What I'm going to be monitoring moving forward is how we trade there. Because the daily chart is in consolidation, it's not that clear to see what we're doing on those time frames, and that's exactly why my participation was limited, because I'm only looking to trade when everything is overwhelmingly in my direction. You notice these past 2 weeks, Telegram has been ghost outside of sharing analysis and teaching points. But other than calling markets, you guys know usually we walk everything on a very tight leash, calling things up, down, all over the place. But I just don't have that clarity. And especially in this climate with everything going on around the world, there's never been a more difficult time to be a trader. So you do have to keep all these things in the back of your mind each and every day as you're going through the marketplace. So again, I wanted to monitor how we trade in this inefficiency. If we are going to rally, obviously we should do it from there. So again, you guys know the key levels that we look at on inefficiencies, which would be midpoint, and then the quadrants, and then I'm going to be studying order flow around those levels to get a better grasp on what this market's likely to do moving forward. So dropping down into our weekly chart, this candle traded lower, tried to rally here, failed, smashed lower, which is reasonable. So what I'm weighing out here is, again, we saw a huge run higher. And again, markets don't just go straight up. They're going to need to pull back. They're going to need to retrace. Is this a top in dollar? I'm still not subscribing to that idea. Again, we haven't even retraced off the highs yet or given any type of retracement from these premium levels. So what I'm looking at is to see how we trade lower. So again, I'm not interested in being an action hound in these markets. I'm waiting for complete clarity where I can see where dollar is going, where the indices are going. And then once those things are in alignment, then I will be looking to risk capital. And you're going to have more of an appreciation for risk as you guys spend more time in this. And frankly, if you lose your ass, that's how typically we learn, especially in these markets. So again, being very cautious with everything I'm saying and what I'm sharing, because if I would have shared analysis this week, being straightforward with you guys, I would have been incorrect. So is that a strength that I'm able to identify that and not do it or not trade myself? Or would it be, is it weakness to say that, you know what, this probably isn't the best condition for me to be trading and sharing analysis, and I'm probably just going to take a step back and do everything I shared on Sunday. Remember what I told you guys my protocol is for non-farm payroll? Monday through Wednesday, I will take trades. I took scalps those days and I shared them with you. But then after that, my participation is extremely limited. I told you guys I'm back testing, I'm studying, I'm doing other things for business outside of trading. Because again, you got to have things outside the charts. Life can't just be charts and trading, because what do you do in these types of conditions? So that's the rhyme and reason as to why I do specific things and why I'm sharing things the way I do. So again, back to the charts here, seeing how we're retracing. I'm going to want to monitor how we trade inside this up close candle here. Should be a bullish breaker. And again, still like this as a target longer term, but what we have to do from now to then is still unclear to me. And now that we're on dollar, I'm going to touch on a few points. If we do see escalation of war, dollar will rally higher immensely. If Iran starts to encroach, we'll say it like that, saber rattle with Israel, then that will absolutely send dollar through the roof because the US will get involved. On another front, in the Asian region, we see that China is poking and prodding Taiwan. United States has already been very vocal about how they're going to step in and defend Taiwan. So with all these things looming, again, what risk manager, what professional asset money manager is out here saying, man, I got to risk all my clients' capital in this? Absolutely not. And that's the mindset that I'm cultivating here with my community and with you guys, that we're professional traders. We're not here gambling because it's casino time and we have time in front of the charts. It has to make sense. It has to be low risk, high probability. And again, in these conditions, that's why we have to appreciate what it is that we're seeing. And ICT, he took his leave about 2 weeks, maybe a week and a half early because of all these factors. Again, professionals aren't itching to get into that next trade. They're not itching to take that next setup and get that next high off taking a trade. You have to be a professional and you have to be methodical about this. And again, this is why I share what I do. Again, I'm not an action hound. I'm not here trying to impress anybody. I don't have anything to prove. I'm just sharing with you guys what I'm doing and what works for myself. Jism, hey Dylan, hello. All right, so let's drop down to the daily chart, look at what we've been seeing. So this is why my interest has been mute in the marketplace. So remember what I shared to you guys from Sunday's stream, that if we were going to remain bullish on this market, I would have had to seen a very specific signature for me to be interested. Again, you guys are used to me calling euro, pound. That's usually what I stay with. And dollar, very easily. We call it higher, we call it lower, and we do the same thing every week. But when we're in these types of market profiles, I don't have that. So I learned through struggle, through losing money, that these are conditions I need to step away from. I need to pump the brakes on my trading and do things outside the charts to then prepare myself for when it's time to get back to business. So seeing this consolidation here, none of this has my interest. None of this has me saying, wow, let me go ahead and share some euro dollar call outs to my community. Again, we take our attention to the cross pairs when dollar's in consolidation. So for the Forex traders, you guys already know what the business is there. So what I was looking at here is we tried to rally once, twice, 3 times and failed. So once we broke down decisively, earlier in the week, I said that this bullish order block here, which is this line, if we were going to rally higher, we would do it from here. Again, we tried to rally, cleared out the stops, broke down and rejected hard. So where my attention is at now that we're displacing through this low, it wasn't just a sweep and rejection higher. My attention on dollar is going to be through these equal lows here. Looking at the range we're trading in, again, we haven't really seen any type of meaningful retracement. So my attention will be looking for the sell side here, and then animation through that would probably take us into this inefficiency. But again, all this can change at the drop of a hat with everything going on around the world. So again, I'm being very cautious with my influence and what it is that I'm sharing with you guys, because all these things present real risk, especially if you're trading size, futures, whatever it is. If, you know, something drops on the other side of the world, something happens, they could send these markets hundreds of points in seconds. And that is risk that you do not want to incur, because that would be very unfortunate. So with all that out of the way, these are all the things that are weighing on my mind before I'm sending analysis and before I'm pushing buttons on my accounts. So last thing on dollar, we'll look at the hourly chart. Again, there's setups, there's scalps in here that can be taken, but by far and large, looking at this 4-hour chart, there's nothing that is low risk, high probability. Again, other than scalping. Scalpers can always find setups. That's why I like scalping. I can go in any day of the week. I can get 5, 10 handles at a minimum every single day, as long as the markets are moving. And even in consolidation, these markets are moving. So that's the nice thing about scalping, is you can still find setups. There's always bread and butter to be made in the markets if you understand how to scalp. But in terms of protracted moves that are going to keep expanding, running for you, that you can hold for a day or for the week, it's really tough to position yourself in this type of climate. And then again, considering the week, FOMC, non-farm payroll, so tons of landmines out there. HS, I'm curious, bro, did you have a perfectionist mindset when you started trading? If so, how have you managed it / deleted it? So yeah, with trading, trading's never going to be perfect. You're going to take stop outs, but it's on how you take those losers. Again, everything that's in the long-winded discussions about risk management, psychology, all those things are important. And that's what's going to make you as a trader. Winning's easy. Everyone can win and take money to the bank. That's not the hard part. But how are you weathering the stop outs? Do you have the self-control to stop? Do you have the self-control to keep it a small loss, come back the next day, and make it back confidently? Those are all things that take time to develop. So that would be my advice for you there, HS. But moving right along, I'll take a few questions, hang out with you guys. I know I wasn't too active this week, but again, covering all the details why. But looking at today's trading, we'll drop down to the hourly chart. So we open, trade higher, and then the market aggressively runs lower. Looking at the, looks like it's clear on the 4-hour chart. We have equal lows here, sell side here and here. And then once we started accelerating down through this balanced price range here, my attention went to these levels and then the bullish order block in here. So we hit those levels. I'm still waiting to see more information so I can get a clear idea on what this market's doing. Again, I don't subscribe to the idea that this is a top in the marketplace. But again, with the climate, things can change very, very quickly. So just taking some time out here to share with you guys, again, why I'm doing what I'm doing and the reasoning behind why I've been absent from trading and sending analysis. Because again, self-control, you don't want the market to have to teach that lesson to you painfully. Trust me. And for those of you guys that are still action hounds, can't wait to get that next trade on, trust me, you don't want to learn those lessons like that. So take good advice for what it is, and we keep it moving. So let's go to T-bond market. This is something else I've been looking at, qualifying these certain things. So we looked at T-bonds. Again, it repriced down into the sell side we were looking for. So a really nice delivery there. So again, this is another reason why I'm more reserved. All my targets were hit. Dollar delivered on the upside, bonds careening lower, hitting those equal lows. NQ, ES all hit my quarterly shifts objectives the week before this. So is any reasonable, logical money manager, again, wow, non-farm payroll, let me risk clients' money or let me risk millions of dollars of capital? Absolutely not. Again, that's retail Rick that needs his next scratch off win. That's just addicted to putting on trades. But again, that's not what I promote, and that's not what we're doing here. Again, you guys that have been with me know that. So seeing that bearish order flow, we hit this level after consecutively dropping lower. So what I was looking at was how we can retrade into that monthly fair value gap, but how we trade there will be significant moving forward. So it's reasonable, again, to expect a retracement. Markets just don't go straight down. They drop, hit a key level that we were looking for, reprices that perfectly. What's occurring there, smart money distributed their shorts, and then now we're just pulling back into the range for some measure of internal liquidity. So dropping into the weekly chart, further refining this, we have this weekly inefficiency here. And again, why is this important? Why am I looking at this? Because the dollar. Bonds are going to follow the dollar. But again, we're at a really interesting place right now with the inflation. Let me put it to you like this. So the food market, if you look at all agriculturals, sugar, cocoa, crude oil, energy, heating oil, all agriculture is ripping. That's weird because usually we don't see dollar and agriculture move up together. So with what the Federal Reserve's considering, with inflation, with all these things, everything's just really out of alignment right now. There's a lot of things going on around the world with food production. I'm not going to touch on all those things right now because that'd be a 2-hour conversation in and of itself. But again, just keep in mind, we're in a weird time in the marketplace where food is rising, agriculture, energy is rising with the dollar, again, because of the war-related events, because of food shortages, and all those things are impacting the markets. So these are all things to keep in mind. So again, looking at this weekly fair value gap, you guys know the levels we watch in inefficiencies. So watching how we trade at the consequent encroachment. If we are going to sell off, I prefer us do it from here. But again, we'll cover all these details come Sunday. But I just wanted to share what it is that, again, I had my attention on this week. And then for those of you guys that were there on Sunday, you guys remember if I said we get above this inefficiency here, we're likely going to want to do what? Run up and clean out these equal highs. So Thursday, Friday, pumping higher into the buy side here, which again is reasonable. We've had a huge run lower. And again, we were all over this from all the way up here. Hits those targets, again, called every turning point, every step of the way. Hit those targets. Again, if we were going to be really bearish and really continue accelerating lower, I said I would have liked to have seen it do it from this breaker here and inefficiency. But then we ended up trading higher into the buy side here, which we covered that if we got above that, we would do this. So again, I'm not calling plan A, plan B. It's saying that this is what I expect. This is what I favor. But in the event that we don't do that, this is what I would expect. So it's a lot of if-then syntax, and that's how it has to be. Why? Because these markets are algorithmic. So if this happens, then that will happen. And that's how these markets are running the code to deliver these price runs. So that's why our conversation and the dialogue that we have with the marketplace needs to look like that. So we cleaned up the buy side here. So I'll be interested to see how we trade here moving forward. If we reject sharply, that'd be something that I'd be interested in watching for T-bonds. And then again, that would allow dollar to continue higher. But again, we're in conditions that are ripe for black swan events. So do not neglect that. Take a look at gold. So gold's pretty much consolidating. We'll look at. So gold cleaned up these equal highs here. We've been struggling to get through this inefficiency. And this is something else I believe I covered on Sunday. That if we're going to remain bullish on gold, we'd have to get above it, use it as support, and then we'd likely run up into these premium levels here. But because we're stagnating, we're consolidating, nothing really of interest on gold for me moving forward. Let's go up to the weekly chart. Yep, so just trading the order flow we see on gold. We have these equal highs here, and if we continue rallying, my attention would probably go 50% of this wick here. That'd be a nice first target. And then how and if we trade there will determine whether or not we run these equal highs. So I know we have quite a few gold traders. And again, it's a highly event driven market. So whenever there's a lot of things going on around the world, geopolitical events, inflation, political unrest, all those things are going to influence gold significantly. So things to keep in mind and what I'll be monitoring moving forward. If we get below this down close candle in here, then we likely are going to want to clean up some of these levels. But again, not to take away any of the thunder from our session on Sunday. Just looking at these details. So let's go into S&P now. Just a face ripping rally on the stock indices. So let's go up to the monthly chart. Let's take this off. So we open the new month, and then again, when we start a new month and we're in the first week of a new month, we typically expect what? Some type of manipulation. So for example, here, what were we here? Bearish. So we open, do that little Judas higher, run lower. Same thing the previous month, open, Judas, run lower. So that's what I'm still, I'm going to be cautious with my analysis. Like I told you guys in the Telegram, I'm keeping my cards close to my vest with what I'm seeing right now. Because again, I know a lot of people just would like to ride my coattails with the trades I'm sending. And if the markets are clean and you don't know how to trade, you might be able to get away with it. But in these conditions, if you just blindly follow anybody's analysis, mine, ICT's, someone on Twitter, you will get your ass smoked. And I'm not putting it lightly because, again, these markets will cause you real damage. They will take real money out of your account if you try to Mickey Mouse around in here. So you need to be very cautious of what you're doing. And that's why I'm not sharing analysis, because I don't want to get that message that says, wait, Dylan, you called the market here. I over leveraged my funded account and now it's all your fault. I'm not here for any of that. So that's why I'm being very reserved with what I'm saying, because it's such a highly manipulated market. But we'll go into some narrative as to what we're seeing and why I expected certain things this week. So yeah, wow. Very strong rally this week. But again, we repriced lower down into my quarterly shift targets, which was this sell side here and this inefficiency. So again, targets were hit, traders been paid, and that completed my quarter. This year, called very nice moves higher, lower. I don't need to push it anymore with all the risk, everything going on in the world. Again, I don't need to push it. I don't need to take that next trade. And again, that's what separates the professional from the retail trader that just has to take that trade. And for those of you guys that did take trades this week, how was it? Were you profitable? Did you regret it? Those are all things that you want to reflect on and journal moving forward. Papa Vlad, what's going on, brother? Nicholas, opinion on euro? Just flip dollar, brother. I'm not gonna be here too long. David, any advice on lower time frame market maker models versus higher time frame market maker models? This week was tough to know which ones to trust. Yeah, exactly, and that's to be expected. We knew it was a hard week, and again, that's why all the professionals that you guys know, myself, ICT, what are we doing? Are we sending analysis? Are we sharing, all these trades? Probably not, because it's a highly manipulated market. So, seeing how we trade below the lows, we pulled higher. But as far as your question, David, about lower time frame to higher time frame market maker models, you got to know narrative. You have to understand what the market's doing, why it should do it, and then that's what's going to make your lower time frame models make sense. If you haven't spent enough time with these concepts, that may be a bit of a vague answer for you. And again, that's why you're just going to have to spend a little more time with it. And again, with someone who knows what they're doing that can guide you through that. What caused ES to rally up very fast? We'll go ahead and cover that. So again, daily chart, market maker model, completed. So all my targets were hit. And again, that's why I said I have very minimal interest in these markets the remaining portion of this year. We opened on Monday, so I wanted to see how we traded in these inefficiencies here. We'll go ahead and clean this chart up a bit. I wanted to see how we traded there. As soon as this candle closed above this inefficiency and into this bearish order block, my attention went immediately to this swing high and this inefficiency. So that was the target for Thursday. And then again, Friday, just continuing the rally. So what's going on there? What am I seeing here? Everyone wants to sell short the market. The U.S. economy is abysmal. Companies are firing left and right. Our unemployment is through the roof. Inflation is through the roof. And interest rates are through the roof. And the Fed is killing demand. So nothing is pretty about the United States economy right now. Nothing is indicating that stocks should be bullish. And the valuations for all stocks right now anyway are in fairy tale land. It should not be where we're at, but again, it's a fake, rigged market, so you have to trade it like such. So what's occurring here? As soon as we took out all these equal lows here, what's every breakout artist trying to do? Sell short. Why? Again, war, inflation, food shortages, and the potential, obviously, World War III on several different fronts. So what does everyone want to do? Sell short the market. So what is max pain? What would bring the maximum amount of pain to the marketplace? Well, let's just reprice it higher. And they're just jamming it higher. So anyone that was short from here that didn't take profit at our targets, or that chased the market down here, that's why, again, we don't sell in discount. We sell in premium here and here. Once we leave it, this is not a short entry down here. We don't take shorts in discount. In your lower time frames, again, you can trade the intraday price action. But looking at the daily chart for what it is, again, that's why we don't sell in discounts. That's why there's rules to all this. And then again, any short holder was just absolutely raked across the coals. Anyone that tried to sell short this rally, again, it's just a slow grind higher, taking bears through the meat grinder. So again, highly manipulated week, not delivering in a clean, low resistance delivery. Because if we drop that into our 15-minute chart real quick, just to touch on a few points, you know, really a 5-minute chart would do it justice. Yes, it's pressing higher, but how's it doing it? Chop, run higher, deep retracement, chop. Looking at this week, Thursday was clean somewhat. Then after we got to about 11 o'clock, chop. So like I said, the market's going to be moving all around, but it's not clean. It's nothing that I want to be in. It's nothing I want to be risking my own capital in. Again, because of all these factors. So again, market's going to be moving all around every day, every week, but you have to know high probability. And again, this isn't anything that I would consider high probability. We don't have the dollar moving in alignment with what we want to see. We have indices ripping higher while dollars in consolidation. So again, no real clean read on the marketplace. But again, we've called monster moves lower. So what more do you need after taking all this analysis straight to the bank? So again, market's ripping higher. We traded to and through, closed above this inefficiency. So when I was monitoring yesterday's close, I saw we closed above it. That's a bullish signature. That's telling me that we still have higher to go. So I said, if we close above this and we start digging deeper into this bearish order block and start closing up into it, then we're likely going to run for these equal highs. But again, I'm taking these markets day by day. Usually, again, you guys are used to me saying, okay, we're going here on a monthly chart. We're going here on a weekly, daily. And again, it just runs over the next course of the couple months. But again, because of the climate that we're in right now, I don't have that visibility long term. My crystal ball only allows me to see so far. And in this climate, there's even less visibility outside of intraday price action. Again, I can go in intraday, I can find setups all day long. But as far as telling you guys where we're going with confidence on a daily, weekly chart, things can change so quick, so abruptly, that it's not even worth me sharing my analysis. But again, if you know that, why would I be trading it? So you guys see that my calls are in the high 80, 90% with everything I share. And there's a reason for that, because I'm not sending every fluctuation, everything in price. If it's low risk, high probability, I'm all over it. If it's not, I'm okay with letting moves pass. I don't need to be in every single setup. And again, that's something that is taught with experience. So let's go ahead and take a look at the NQ. So NASDAQ ripping higher. We're going to take these levels off. Into the fair value gap, trading deep into this bearish order block. Again, hitting that liquidity void, which was the downside target to the point, and then reversing right from there. Again, that's probably not random. That's an algorithmic target that smart money was keying off of. So we hit our targets. Again, trader was paid. We go into Monday, and then we just see a face-ripping rally. That, again, anyone that was trying to sell short this market, if we drop down into our hourly chart, anyone that was trying to sell short just had their face absolutely ripped off this week, trying to short, trying to impose their will in a manipulated market. So seeing this here, again, once we got above this hourly fair value gap, we closed above it here, used it as support. So again, we're on the buy side of the curve. So in a sense, market maker buy model into this original consolidation. So my targets this week was these equal highs, once we started showing these bullish signatures. But again, because things can change so quick, that's why I was very reserved in my analysis, because even if I would have shared where we're going, it would have been very difficult to make money because positioning yourself in this manipulated environment is extremely tough. So this is the side of trading. Again, it's not flashy. It's not sexy, here talking about risk management and preserving equity. But those of you guys that have been in this long enough, lost enough of your ass in the market, you can definitely appreciate this advice for what it is. So newer traders, you may be newer to this, but again, this is what you want to be hearing. Not just rah, 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 action hounds, short, long, all in the same day. We're not promoting any of that here. Promoting very professional mindset. So seeing the market trading higher, no pullbacks, not allowing anybody to get out of their shorts, just continuously pressing it higher. So again, anyone that wanted to see this market go lower was just taken through the meat grinder. And then anyone that was short already, again, squeezed out of those positions violently. So that's what I was seeing this week. Go ahead and take a few questions, and then we'll go ahead and get going. So I just wanted to keep this one brief, share, what I was seeing. Again, people are going to see this as a bottom. So is this going to be a long-term bottom? I don't know. A lot of things can happen over the weekend before Monday's open. So there's just, again, a lot of things to consider there. So I also wanted to go ahead and give you guys a tentative schedule for everything that I'm going to be doing here until the close of the year. So we're in November. We're wrapping up this calendar year, going into the holidays. So again, for those of you guys that know, we're going to begin private trading come January. Website, still working on that, putting the work in on that front. So we should have that soon, ready to go soon by this month. So again, the tentative schedule, what I'm looking at is January, first week, second week, start mentorship. Again, all those details will be out, and then we'll open private training. Going into holidays, after the second week of November, into the third week, I'm going to be shutting it down for Thanksgiving. And then on the other side of Thanksgiving holiday, I'll hang out with you guys for about 2 weeks. May look to do some trading depending on what we see from the beginning of December to December 14th to 15th. And then once we get to middle of December, it's lights off, shutting it down, enjoying the holidays, as I will recommend you guys do as well. And then we will get back to work come January and get to work for real. And again, take you guys to that next level that want to work with me. So that's the tentative schedule for the remaining portion of this year, what I'm planning on doing and why. So with that, I think I'll take a few questions and then go ahead and get going. But again, many of you guys didn't get a trade because I was sharing, obviously common sense is going to tell you it's a manipulated environment, probably not the best to be trading, but you see the market moving all around and you get FOMO. If I'm not in every move, if I'm not worried about it, is it reasonable to expect that you should have been in all these trades? Probably not. So again, even professionals miss moves, but I'm still going to do what? Finish November profitable. That's the important thing. That's the bottom line. So don't forget why you're here and why you're in this business. Jay, let me go ahead and take care of your question. Will you be watching the monthly fair value gap, consequent encroachment on Dixie, and monthly order block below? Yeah, exactly. So dollar index monthly chart. And again, market makers use the sentiment of everything going on around the world, all the chaos, to manipulate the markets more so. And then they use that as an excuse for why they're able to reprice it violently. So again, that's why we're seeing extrapolated runs that seem to come out of nowhere. But again, they're just using this sentiment to run on traders. So yes, I will be monitoring the consequent encroachment and see how we trade at that level. If we do rally in dollar, we should do it from here. Monthly bullish order block. Yeah, this would really be a last line in the sand, but I wouldn't even really want us to get this deep because I would want to see some of this inefficiency left open if we are to remain bullish. But again, just playing it by ear, not terribly interested in these markets right now until we get that clarity I need. Mush, hey Dylan, any estimate on the cost of mentorship? Want to be a part of it, but trying to figure out if I can afford it. Yep. So we'll have all those details again in the website. Again, I know I've been saying that a lot recently, but everything's going to be there, all the information you need, and I'm going to have it out 2 months in advance so that everyone can prepare their personal life and, again, financially to find the funding to, again, make that investment into a proper trading education. So, again, I'll be giving you guys all that information soon, and I appreciate your guys' patience very much. Anita, hit that like button. Thank you for the support. Greatly appreciated. Christopher, missed you this week, man. Let's hope that next week markets look nicer. Yeah, I'll expecting next week to be nicer. Again, it's the first week of the month. It's non-farm payroll, not for professionals, and there's still 3 weeks of trading ahead. So, again, markets move all around, but you don't need to be in every trade. For someone new, is it better to open a small personal or start prop firm challenges? So for someone that's absolutely new, neither, because the unfortunate thing that a lot of people do that make mistakes with this industry is coming in trying to make a lot of money fast, and all you're going to figure out is that you have no idea what you're doing trading with live money. And again, you can learn that in a demo account. You don't need to bleed out all your capital to learn you have no idea what you're doing. So again, not talking down to you, just giving you the reality, because I wish I knew this when I came into this business. So my recommendation would be to find consistency in a demo. Trust what you're doing, trust your model, gain confidence, bring yourself at a drawdown, ride that horse for a little bit. And then once you get comfortable, and then you will know when it's time to take that next step into live fund trading. I never tell my students when to do it, or anyone that I'm working with. It's something that you just know. You're bored by it. You know what you're looking for. You're confident. And those are 3 things that tell you you're ready to trade live capital. But I'll never tell anyone to do that. Nicholas, I've been constantly putting 4 hours a day for 3 months on the charts and studying, and been profitable on demo by a lot. How do I define if it is pure luck or genuinely the strategy is working? So I would say anywhere from 3 to 6 months will give you good data as to know whether or not that what you're doing is something that's going to work in the long run. People can get lucky for a month, 2 months, think, wow, like I really know this. You get into the market, hands them their ass, and then obviously they realize that they didn't really know what they were doing. So I'd say 3 to 6 months is enough of a barometer. But how are you feeling? You know, are you confident? Are you bored by what you're doing? Are you still hopped up? You know, those are all things to consider and weigh out when you're looking into making that transition. So if it helps you out there, Nicholas, keep up the good work though, my man. Consistently profitable on demo for 3 months is definitely an achievement, better than most traders. So keep up the great work there, my man. Remnant Capital Trader, do you consider the numbers from the news release on the economic calendar? I do not. I just understand that the economic calendar is providing a volatility injection into the marketplace, but the data itself and what they're producing in and of itself is insignificant in my analysis. Is everything good on the stream? Yeah, everything should be good. So yeah, I don't look at the data. I just understand that they're going to use that sentiment that the news bring out to manipulate traders. Papa Vlad, all good, all good. How was your week? Had a good week, my man. Taking it easy, studying, back testing, and not trading. So taking it easy, brother. How about you, my man? Hope you're doing good. Saw you took some killer trades this week, and I also saw you use that model that I shared on YouTube. And because you're a pretty advanced trader, Papa Vlad, I'll definitely be sure to make part 2, and I'll show a little more advanced money management strategy of how you can pyramid with that model, reduce risk, and take down monster trades. So I got more coming on that front. Papa Vlad, thanks for joining us though, brother. Ashley, which assets do you check for SMT when trading oil? So there's 2 oil instruments that you can trade. There's WTI, West Texas Intermediate, which is United States crude oil. And then there is Brent crude, which is the European oil. So I look at those 2 when I'm looking at SMT in the crude oil market. Lucas, I'm out for today. I'll see you on Sunday. Wish you and everyone here in the chat a good weekend. Take care, Lucas. Thanks for joining us, brother. Uriel, Barajas, why do you use the December contract instead of the continuous contract? That's a good question. That's something that I wondered very early on as well. So let me go ahead. I'll share NQ. It's actually a perfect example. So you see how I had this target as a liquidity void and we were all the way up here. This level here jumps out on the charts to me. It's like a huge neon sign that says, look at me, look at me. So this was a target on the downside that we used and we traded real time. I took setups that were attacking this level. So why was I using that level? Because it's a liquidity void. But if we go to the continuous contract, there is no inefficiency there. So when you use the official front month contract, you're able to see inefficiencies and levels that the algorithm is going to refer to, but that goes right over the head of traders that aren't using the correct contract, but knowing how to use it. That's the most important thing. Not just, okay, I'm on this contract. You got to know how to use this information. And obviously the market is gravitating to these inefficiencies within the proper context. You can't just say, okay, inefficiency, the market's going to run to it. Well, you have to be bearish, which we were. There has to be other signatures that are supporting price, and then you can start using all that information. So hopefully that covers your question there for you there, Uriel. Abderrahim, thank you for the explanation. Absolutely, glad it was helpful. NQZ, silver bullet. Yeah, so looking at today on a 1 minute chart, this is nothing I can say that, wow, I really, really wished I traded this move today. Nothing in this price action has me saying that. Me, 1 year ago, I mean, not even a year ago, 2 years, 3 years ago, would have been all over this, man. Trying to force it, trying to buy, got stopped out, sell short, buy again, get stopped out, go long, switch my bias, and it would just be a blood fest. And it would be my own blood that was being spilled. But now I know better. I know that these aren't conditions that are high probability. If you go to a daily chart, yes, the market's moving all around. But again, can you position yourself with low risk, high probability in this? Probably not. And again, that's something you would rather not learn painfully, but we all got to learn somehow. At Gamer, I love your A+ strategy setup. I've been using it lately. Is it possible? Can you make a video on exactly how to identify a breaker? I've covered it in live streams. It's something that you'll just get a feel for spending time with it. But if you want that further education and guidance by me, again, that's something that I will be providing. But if you want to learn more about the breaker, ICT has it on his YouTube channel. And then I have applications on how to use it. Again, I don't think my channel is great for a beginner because I'm not covering what's a fair value gap, what's an order block, what is an inefficiency. Those things are kind of expected to be known. But so my YouTube channel wouldn't be great for beginners, but once you know what you're doing, once you know how to trade, and you have a basic understanding of these concepts, then my YouTube's a great resource for that. Papa Vlad, it was a good week. Monday and Tuesday I traded and made my weekly target. Beautiful model. I can't wait for you to go in more into detail. Yeah, it's definitely a high-powered model for sure, brother. Glad you got in. Secured the bag early in the week is actually exactly as we're trained to do. And then done for the week. Nice, man. Glad to hear it. Just demo trading, tape reading. Awesome, brother. Exactly. That's the move this week, man. That's the move this week. Again, not looking to push it, do a whole lot of stuff. There's no reason to do that. There's more weeks to make money. There's more opportunity, and I expect next week to be a cleaner week in terms of delivery. At Gamer, understood. Thank you. Absolutely. Ian Harper subbed. Glad to have you, Ian. Thanks for joining us. Matthew, because of the lack of clarity regarding the dollar and indices for trading going into next week, do you only look at like 4 hour and stuff to come up with the drawn liquidity instead of daily, weekly candles? Yep. So when I don't have that higher time frame clarity, I have to go into lower time frame charts and find a setup. So if you guys want, I get some reaction here in the or some comments, excuse me. I'll cover a trade I took this week that was a scalp in and out, and I'll share what it is I look for and how I trade these types of environments. So again, there's still setups, but it's not easy for newer students. So I'll go ahead and cover that for you, Matthew. But yeah, so it's pretty much a scalper's market trading intraday if I don't have that higher time frame draw on liquidity. Nabil, 0 trades for me this week. I'm in profit last month. I want to keep that bag. Absolutely, man. And by not trading, trust me, you did better than 90% of traders that did try to trade. Trust me, they're not going to come out and say they lost money. But for those of you guys that traded this week, again, for the exception of a few, you probably had a very difficult time, even though it was moving around. So again, not kicking sand in your face. Again, I've been there, but again, that's why it's important to listen to sound advice, manage risk, and know when to step away. So great job in the build. Glad to hear that, brother. Glad to see that professional mindset in the community. That's what we need more of. Hassam, hey bro, how are you? Doing great, my man. Hope you're doing good. Remnant Capital Trader, I've been looking at those figures on the calendar, and whenever they come out negative, the dollar has been dropping lower. The equities to rally higher. Does it mean these numbers are meaningful? You know, I don't ever tell anybody how to trade. If you find success with something and you're making money, man, that's awesome, because 99% don't even get to that point. So if you have a strategy, if you have something that works, great. Personally, I think all those numbers are nonsense. I think they're fake. I think they're used to manipulate traders. And that's personally how I see these things. But if you find success with it, again, who am I to say not to trade that or your strategy is incorrect? I mean, again, the goal is here to make money. It's not to argue whose strategy is better or what strategy you should use. Again, we're here to put money in the bank. Matthew Davis, yes, please cover your scalp. Why did Michael say we would be moving sideways 3 weeks ago? He specified the week itself and said we will stay within it. How do you know that? That's a good question. So looking at the weekly chart, it started showing problematic signatures. The market, this is a little more advanced, predicting consolidations. But because we were unable to rally meaningfully through consequent encroachment of this wick, and then we weren't able to accelerate lower because the market's still underlyingly bullish. Again, it's just a small retracement. So because we failed to see those signatures on the upside, that communicated to him that the market was not very strong. And then going into the daily chart, seeing that we've just been stagnated around these levels. Really no acceleration on the upside. Market trades lower, not respecting this level. Trading higher, not respecting any level. So we're just in consolidation. So once you can identify that, that's what tells smart money traders, people that are informed, that this is communicating what? Don't touch me. So there's a lot of factors you have to understand to look at those things. But hopefully that covers your question for you there, Hassam. Yes, cover your scalp. All right, I'll touch on that briefly. All right, so daily chart, looking at this inefficiency here, and just going to cover a quick setup I took this week. We're going to go ahead and close out. Again, give you guys a little bit of value before going off into the weekend. So looking at this gray inefficiency here, this is the higher time frame premium array I was keying my levels off of for this trade. So I sent this trade in the Telegram. It's one I took on Wednesday. AM session, so you guys will be able to see that, and this is all the logic behind that trade. So again, as we were trading higher, my attention went to this inefficiency, and again, what levels do we look at? It's not an ambiguous zone. It's very specific levels that we look for, which would be consequent encroachment midpoint, the low, and the high. And then obviously we can break it up into quadrants as well, but not going to go into all that detail right now. So we drop down into our hourly chart, and let me put the market replay tool on just so we can focus on what's salient here. And I'll go ahead and make this one blue. Make it purple. All right. So a lot of factors that went into this trade. So it's going to be a little bit of a deep dive. So for those of you guys that are newer here, it may not make sense to you, but trust me, spend enough time with it and these things will absolutely start to become clear to you. So seeing how order flow was what here? Bullish. So I'm not looking to sell short, even though I was bearish on the higher time frames based off what I was seeing. And right now I'm neutral. I'm not bullish. I'm not bearish. I'm nothing with these markets. I don't care. I'm not interested in it until it shows its hand in a clear way. But seeing the order flow here, again, we're on the buy side of the curve, or we're seeing bullish order flow. The down close candle. We hit that. We do what? We rally. Down close candle, bullish order block, the high, hits that level, does what? Aggressively reprices higher. Down close candles, bullish order block, we hit that level, do what? Reprice higher. So again, you have to know basics of how to read order flow. And again, those are all things I teach at length when I'm training clients and I'm working with them. But again, there's fundamental things you have to understand. It's not just show me your 1 minute entry model. There's other things you have to know to support it. And again, people that were trying to force a short bias this week, again, very, very tough trading for the bears that we're trying to force. So seeing this here, again, we hit that order block and then we rally higher. So let's take this level off real quick. We're going to go into some detail here. So seeing how this 1 hour candle did what? It's reaching for what? This daily inefficiency. So don't get lost through the time frames. Again, this will be recorded, so if you're going to go through it, it'll be there as a resource. But don't get lost through the time frames, because the top-down analysis is what this, these algorithms are running on and what makes this precise. So we have a daily inefficiency. We dig up into that. How do we trade through this high? Is it an anemic, weak run higher, or do we displace aggressively? We see aggressive displacement higher here. Again, bullish breaker. Hit that, accelerate. What signature in here confirmed to me that this market was strong? It was the fact that we closed above it. So the fact that we have the market closing above this consequent encroachment tells me what? That we're likely to reach for this level here. It's a strength signature. This is what smart money's reading. These smart money entities, these people that are trading these concepts that understand what the market is doing. Again, this isn't a concept. This isn't a theory. This is the actual market. So this is what these smart money traders are looking at. So when they see that signature, what does that tell them? Keep looking higher. So what's the next higher level that we covered on the daily chart? It would be the high end of that daily inefficiency. Again, order flows bullish. So we're going to do what? Continue repricing higher. So again, I was bearish at the beginning of the week, but does that mean I get in here and impose my will and look to sell short? No, you have to trade what the market's giving you. So if we closed above this, and if we're likely to reach for this level here, would this inefficiency here, would that serve as like a 2022 model, trade into it and go short? Or is it going to act as support? It's going to act as support. So don't forget what that purple region is. And again, the higher dotted line is going to be the midpoint of this hourly inversion fair value gap. So don't get lost through the time frames. So going through Wednesday's trading, which is my last trading day of the week. I don't like to trade after non-farm payroll or after Wednesday's trading. Again, I may take some trades after non-farm payroll, but it's something that I'm taking very little leverage on and not looking to risk a whole lot. So looking at this day here, traded lower, cleared out the stops here, aggressive repricing higher above this high shifting market structure. We do what? Trade into the inefficiency, bullish breaker. We do what? Off to the races. So looking at this here, let's further refine what it is that we're looking at. So on this 15-minute candle here, we trade higher. We do what? We close above the hourly fair value gap. So does that tell me we're going to trade into it and use it as a short? Or are we going to trade into it, use it as support to rally higher? We're going to use it as support to rally higher. So let me go ahead and put that on there. And again, there's an execution. So this isn't all hindsight. I'm trading all this information here real time. So again, hit that order block, breaker, fair value gap, inefficiencies here, what? Left open. So the fact that it's left open tells me what? That the market is reaching for somewhere in a hurry. So these are the signatures that I'm reading and I'm looking at when I'm looking at price action. And that's why nothing else even comes close to what we do with these concepts. So 5-minute chart here. Same thing, trade down into the breaker, fair value gap after making this low, rejecting it and displacing higher. So again, let's keep these levels here in mind and understand what it is that we're looking at. So once we trade lower here, again, order flows bullish. We trade into the breaker. We hit that. We do what? We rally. Down close candle here, bullish order block. We hit that level. We do what? Off to the races. Down close candle. We do what? We hit that. Rally. So order flows bullish. So I'm not looking for shorts in here because I'm reading the present order flow and I'm taking what the market is giving me. So once we displace through this high here, we had 10 o'clock news. I'm not going to look to trade before that because here you can see the whipsaw that it does, higher and then lower. But again, still respecting these key levels here. So what I want to do here is go into the 5-minute chart and share what it was that told me this was a valid trade. As soon as I saw this 5-minute candle close above this hourly fair value gap, that's all I needed to see to know that the market was going to run here. And it offers what? 10 handles. So once we close above it, what's the expectation for this hourly fair value gap? It's going to do what? Act as support. Hit it to the point, not random. Everything's algorithmic. Who's keying off those levels? Who's buying at that level right there that knows it's going here? Who's doing that? Smart money. The people that we don't hear about. These people are faceless. They're behind the scenes. And again, they're the 1% that's taking the 99%'s money. They don't want to draw attention to themselves, but they're the class of trader that's taking advantage of this. That's why when I see other concepts, other philosophies, I understand it's nonsense because I know what the market's really doing. So let's go ahead and just put this up to here so we don't have to worry about any of that. Close above it. Again, that's the signature that tells me we're going higher, get long. So 1 minute chart. Now this is where the entry patterns become effective. It's not just getting an entry. You have to understand certain things that are supporting what you're looking for. So we trade lower, clean out the stops when at 10 o'clock, when we expect manipulation. So anyone that was long, that had a stop jammed up, stopped out. So I'm waiting for a very specific signature. As soon as this candle trades higher, closes above this hourly purple inefficiency, closes above it. What does that tell me? We're strong. We're going to reprice to the high end of that daily fair value gap. So as soon as we're trading down in here, this is what model? That's my A+ model that I shared for free on YouTube. We have a breaker here. Low, lower low, breaker, and fair value gap. Again, this is why it's my favorite model. Look at the drawdown that you have on this trade. You enter the fair value gap, immediate feedback that you're on side. So that's why it's my favorite model. That's why it's so high powered. And that's why, again, it's the one I use. It's my go-to. Funded account challenges, passing them, getting payouts. This is the go-to model that I'm trading. But again, it's not just a model that in your hands that's going to work. You have to understand how to trade, how to read the market, and where it's drawing to. Once you know those things, again, then the model becomes easy. So hit that fair value gap, hit the high end of that hourly fair value gap that we already covered why that's going to be support. So that's why I'm buying in here, just like smart money's doing. Hits that level, turns on a dime. Is that random? No. And then we run to where? This high here. So let me go ahead and put that trade up because, now that I'm explaining all that, might as well just show the trade. One moment. All right. All right. So this is that setup I was taking there. As it's smashing down into that fair value gap, I wanted to be buying there, but it didn't fill me, so I had to go in at market. But again, the same logic still applies, going long here, taking partial here, and then closing out as we're trading into that daily fair value gap. Again, I don't need to get the perfect entry. That's more than enough to pay the trader for this week. And then again, that's when I'm wrapping up my business for this week, finishing the week, letting the gamblers get chopped up and, all this mess here, that type of stuff. Again, I'm not interested in that. And then that was the logic behind why I took that trade. So because I wasn't that active that week, figured I'd give you guys some value in terms of what I was looking for, what I did this week. Yes, there's still setups. Yes, there's still profitability. But that's not something that I can communicate in Telegram, for example. To cover all those details, all those factors as these 1 minute candles are printing, isn't something that I can just share on a Telegram message. So again, that's why I was very reserved this week. But hopefully next week, things will clean up a little bit and we'll get back to business as usual. Matthew, hold on. Can you review COT data and open interest from the CFTC sometime live with us? Commercial traders are now net short. Yep, COT is something I cover, and I would believe that the commercials would be short into all this rally here. So yeah, that would make sense. That's definitely something I can look to do moving forward. But again, those of you guys that want to be privately trained, again, we're going to cover all those details there. But if you want a resource for it in the meantime, you guys can definitely go to ICT's YouTube channel. He is a great resource. Nabil, dollar looking like power 3. We are in the manipulation phase of the weekly. Yep, that's what I'm favoring. But again, keeping the cards close to the vest this week. Matthew Davis, when do you know if it needs to return to discount or not? Experience. Experience will teach you this. And again, that's why any responsible mentor, anyone that's not just out here to take your money, will tell you seriously that this is going to take a long time to learn. Again, I always compare it to what? Lawyer, doctor, engineer. They're not in their freshman year or their first year of school saying, man, when am I going to start making some money? Hell no, they still got 7 more years of school left. Trading is the same way. It's not get rich quick. It's not, get in these markets and, start printing cash and quit your job in a week. There's a lot of things you have to know, understand, and grow in your understanding. So that's why you got to, number one, enjoy the process. Enjoy the process of studying, back testing, because you're going to be continuously doing it the rest of your career. So again, once you fall in love with the process, that's the best thing to do because it's going to make it something that's easier to do. And then it's going to allow you to stick with it for the long run. Because if you're expecting to find profitability in under a year, 6 months minimum, somebody sold you a pipe dream and it's not going to end well. And again, I'm just being that voice of reason that, trust me, it's the one you want to hear. You don't want to hear, buy my course, take 100R trades and all the bullshit that we see in this industry now. So again, anyone that's worth their grain of salt in education and teaching you is going to tell you that there is a learning curve because there's a lot of things to weigh out. But again, these concepts are second to none. Again, I'm a little biased, of course, but this is the market. So you are in the right camp. Mitch, can you explain the 3 PD arrays for stops for the scalps? I've covered it in other lectures. I covered it in my A+ trading model, but I'll cover more of that another day. That's a detailed topic in and of itself, discussing stop placement, how to do it, how to adjust it. So that's something I'll teach. Richard, great analysis, boss. Thanks, brother. David Lombard, appreciate you, brother. Thanks for joining us. Anita Lowe, thank you so much. Glad to have you here. Thundup, does this change your stance on the market moving forward? Guys, I've already shared the bias, guys. The bias is carnage. The bias is a slaughterhouse. That's what's going on in the markets. There's nothing that I can point to that say we're going here guaranteed because things can change so quickly. So again, just take that for what it is, guys. Can you share what your mentor program will look like? That's a great question, Eric. Again, all those details will be up and it will be detailed in terms of everything you'll be receiving in terms of live streams, market reviews, commentaries, everything will be covered on the website. So again, you guys will have all that information there. All right, guys, so I'm going to go ahead and sign off here. Just wanted to get on here briefly with you guys, hang out. I know you guys didn't get too much of me this week, but just wanted to cover what we were looking at, and why we're seeing this in the market. So again, guys, you might not have gotten these trades, but I didn't either. That's what professional trading looks like. We killed it these past few months. And again, day trading is not everyday trading. And that is sound advice. Trust me, take it for what it is. And the reason I'm being so cautious with everything I'm sharing is because I wish I had this guidance when I was coming up. All I had was, man, it's non-farm payroll, load up the options contracts before market closed the previous day. Let's ride, baby. And I would dust accounts in stunning fashion. And trust me, you guys don't want all that PTSD, scar tissue, and fear that comes with that. So again, just being responsible here and sharing the right way to go about this. So with that, I hope you guys have a great rest of your weekend. Hope you guys had a great week. We'll be back to business on Sunday. And good luck and good trading. Take care, everyone.